Jake's dad drove a delivery truck for 30 years. Jake just crossed $1.2 million. No inheritance, no startup. He just understood what was happening before everyone else did. And if you think building real wealth requires the right last name, the right school, or a trust fund you'll never have, don't go anywhere. Because what you're about to hear will change how you think about money for the rest of your life. Jake wasn't supposed to be rich. His dad drove a delivery truck for 30 years. His mom worked the front desk at a dental clinic. Good, honest, hard-working people who spent their lives doing exactly what they were told. Save a little. Don't take risks. Be grateful for what you have. Jake grew up believing that wealth was something that happened to other people. People with the right last name. People who went to the right schools. People born into rooms he'd never be invited into. He was 34 when everything he believed about money turned out to be wrong. Not because he invented something, not because he won anything, not because some inheritance landed in his lap, but because he paid attention to something almost nobody else was paying attention to. A transfer, a movement, a shift so enormous that economists were struggling to find historical comparisons. He simply understood what was happening before most people did. And then he acted. Today, Jake is 41. His net worth crossed $1.2 million last year. He still drives a used Honda, still orders the same black coffee. But his relationship with money and with time is completely different from what it was 7 years ago. He didn't do it through luck. He did it by recognizing a moment. And that moment, it hasn't ended. For most people, it hasn't even fully begun. Here's what's actually happening. There are points in history when wealth doesn't just grow. It moves. It shifts from one group of hands to another. The people who understand that a shift is coming, who position themselves even slightly in its path, end up on the right side of a divide that takes generations to form. We're standing at one of those points right now. The number is $124 trillion. Read that again. $124 trillion. That is not the GDP of a country. That is not the value of a stock market. That is the total value of assets held by the baby boomer generation, people born between 1946 and 1964, actively transferring to the next generations over the next 2 decades. Get the real breakdown of where $124 trillion is flowing. Follow now so the next video lands in your feed before this window closes. Cerulli Associates published their latest projections in 2025. The number they arrived at for the great wealth transfer, running from now through 2048, is $124 trillion. They call it the largest intergenerational wealth transfer in recorded human history. Nothing in the historical record comes close. To frame it differently, the entire annual economic output of every country on Earth combined totals roughly $110 trillion per year. The wealth transfer exceeds that. In total assets, moving, shifting hands, looking for places to land. That's not a market trend. That's a geological event. The oldest baby boomers turned 79 this year. The youngest are 62. The transfer isn't coming. It has already started. Right now, estates are being settled. Trusts are being activated. Accounts are being inherited. Properties are changing names on deeds. This is not a prediction about the future. This is a description of the present, and most people have no idea it's happening. Jake found out through a financial planning report he read at 11 p.m. on a Tuesday because he couldn't sleep. He wasn't looking for it. He stumbled into it. When he read the numbers, he sat up straight for the first time in an hour. He told his wife the next morning. She thought he was exaggerating. He wasn't. Now let's talk about what this actually means. because the headline number is just the surface. The real story is in the mechanics. Baby boomers currently control approximately 52% of all wealth in the United States. Roughly $78 trillion concentrated in a single generation that is aging at a rate that cannot be slowed. Cerulli's research breaks down the flow. Approximately $54 trillion will transfer first to surviving spouses, and nearly $40 trillion of those transfers will go specifically to widowed women. That is a redistribution of financial power on a scale that has never happened before in this country. From there, the flow continues to heirs. Generation X stands to inherit approximately $39 trillion over the next 25 years, roughly $1.4 trillion per year over the coming decade. For a generation sandwiched between boomers above and millennials below, the math is about to change fundamentally. Millennials will receive approximately $46 trillion, arriving as most enter peak earning years, inherited capital stacking on top of career income, creating multiplicative effects unlike anything seen before. The pandemic relief effort, every stimulus package, every emergency measure, every expanded program totaled approximately $5 trillion. The wealth transfer represents 25 times that amount sustained over 2 decades. No government in history has ever moved $124 trillion. No war, no recovery program, no economic expansion. This is happening right now, quietly, in estate attorneys' offices and probate courts and brokerage accounts across the country. Thousands of people just like Jake, no trust fund, no Wall Street connections, are already repositioning. Follow and join them before this transfer accelerates. Here is the critical piece that most people miss. You don't have to inherit anything to benefit from this. The opportunity is not about receiving an inheritance. Most people won't receive a life-changing inheritance. Cerulli estimates roughly 62% of the assets being transferred will come from the top 2% of families. Concentrated wealth transfers to a small number of heirs. That is not where the opportunity lives for regular people. The opportunity lives in what happens to the economy when $124 trillion starts moving. Money in motion creates ripples. When trillions shift into investment accounts, asset prices rise. When newly wealthy heirs purchase real estate, property values surge. When inherited capital funds businesses, hiring expands and wages rise. When families restructure estate plans, an entire ecosystem of advisors, attorneys, tax specialists, and wealth managers sees demand explode. The wealth transfer doesn't just enrich heirs, it pressurizes the entire economy. Everyone already positioned, who owns assets, who has accounts, who is invested, participates in the uplift. This is why Jake became a millionaire. Not because he received anything, because he understood that a massive amount of capital was about to start flowing, and he made sure he was in its path. He maxed out his 401k, opened an IRA and filled it, invested in broad index funds and stopped trying to time the market, bought a house in a city that younger, wealthier demographics were moving into. Nothing exotic, just the boring things, consistently, patiently, with full understanding of why the tailwinds were real. 7 years later, the math did what math does when you give it time and direction. The parallel to 2009 makes this moment feel familiar to anyone who was paying attention back then. On March 9th, 2009, the S&P 500 closed at 676 points. Retirement accounts had been cut in half. The economic headlines were unrelenting. Jake was in college. He didn't have money to invest, but he watched what happened to the people who did. From that bottom through early 2026, the S&P 500 rose over 900%. Every $100 invested became roughly $1,000. But what surprised Jake when he dug into the data was who actually captured those gains. According to the UBS Global Wealth Report released in 2025, the United States added 379,000 new millionaires in 2024 alone, more than 1,000 every single day. The vast majority became millionaires not through dramatic windfalls, but through steady, consistent participation in rising markets. Teachers, nurses, accountants, small business owners, people who showed up, kept contributing, and didn't panic. From 2010 to the end of 2024, millionaire households in the United States grew from 8.4 million to nearly 24 million. 15 million households crossed the $1 million threshold in 14 years. That's the entire population of the New York metropolitan area becoming millionaires together. The wealth transfer is the next version of that story. Goldman Sachs research shows that missing just the 10 best trading days since 2009 reduces annual returns from approximately 17% to approximately 12%. Missing the 25 best days cuts returns nearly in half. Those best days almost always happen during the most volatile, most frightening periods, when the headlines are loudest and the temptation to step back is strongest. Missing the 10 best market days cut returns nearly in half. Missing this follow button costs you nothing, except the next video that could change your financial trajectory. The wealth transfer will not arrive as a smooth, comfortable signal. It will arrive alongside volatility and noise and reasons to wait. Recessions will punctuate the period. Corrections will shake markets. Headlines will declare the old rules no longer apply. History strongly suggests those warnings will prove wrong, just as they did in 2011, 2013, 2018, 2020, and 2022. The underlying force, $124 trillion seeking productive deployment, will keep driving opportunity regardless of what the news says on any given Tuesday. Let's make the numbers concrete, because specific math changes behavior in ways that abstract projections don't. A 35-year-old today who invests $500 per month in a diversified index fund for the next 25 years puts in $150,000 total. At the historical average of 10% annually, that grows to approximately $665,000. At a conservative 7%, approximately $405,000. Factor in even 1 percentage point of additional growth from wealth transfer tailwinds, and the outcomes shift meaningfully. Increase the monthly contribution to $1,000 as careers develop and incomes rise, and the 10% scenario produces approximately $1.33 million. Regular people reaching millionaire status through math, time, and consistency alone. Every week on this channel, where the $124 trillion is flowing, which sectors are capturing it first, and what regular people are doing right now, one follow all of it. Understanding where the money flows matters just as much as the decision to stay invested. Bank of America and Merrill Lynch research shows 72% of investors between ages 21 and 43 believe traditional stocks and bonds alone can no longer produce above-average returns. That is a generational shift representing trillions of dollars moving differently than it did under boomer management. Artificial intelligence infrastructure, clean energy, healthcare innovation, sectors already capturing disproportionate attention from inheriting generations. Capital follows attention, and the attention is shifting. Next video. The exact sectors capturing the most wealth transfer capital right now. Follow so you don't miss it. Real estate positioning matters enormously. Markets attracting younger, wealthier workers, cities with technology concentration, strong job growth, and quality of life characteristics that resonate with millennials and Gen Z will see sustained demand even as estate inventory increases. The same $500,000 deployed in a market capturing incoming wealth versus one losing population produces dramatically different 20-year outcomes. This is already in the data. Cerulli, UBS, Goldman Sachs, Bank of America. The research is public. The breakdown isn't. Follow for weekly translations of what the data actually means for your money, not Wall Street's. Now, let's talk about timing because it always comes up. People want a signal, a bottom, a clear bell that rings and says now. The 2009 bottom looked obvious in retrospect. At the time, nobody knew it was the bottom. The people who captured the subsequent bull market weren't people who had certainty. They were people who acted on available information without waiting for certainty that never arrives in advance. The wealth transfer doesn't have a bottom to time. It's a 25-year structural process already underway. The oldest boomers are 79. Transfers are happening today. Estates are settling today. Accounts are changing hands today. Waiting for a better entry point means missing years of compound growth while the transfer continues without you. Jake keeps coming back to something a planner told him at a conference a few years ago. The best time to plant a tree was 20 years ago. The second best time is now. Not original, said 1,000 times, but it keeps being said because it keeps being true. Jake's parents did everything right by the standards of their generation. They worked hard, saved carefully, played it safe. And they ended up comfortable, but not financially free. Not because of bad choices, because they didn't know what they didn't know. Jake learned what they didn't know. Late at night, in a kitchen, drinking coffee, he probably should have skipped. He acted on it. Slowly at first, then with more confidence as the logic got clearer and the math started confirming itself. 7 years later, the numbers tell a story his parents wouldn't have believed possible for someone from their background. No trust fund, no famous last name, no connection to anyone powerful. Just a man who understood what was happening in the economy and made sure he was in its path. 7 years ago, Jake made a decision. What decision are you making today? Drop it in the comments. And follow for the weekly framework to back it up. Here's what's true about this moment. The information isn't secret. The Cerulli research is public. The UBS numbers are published. The demographic data is available to anyone willing to look. No insider knowledge required, no exclusive access, no special relationship with anyone. The great wealth transfer is documented, studied, and visible to anyone paying attention. Most people aren't paying attention. They're watching daily market movements instead of multi-decade structural forces, reacting to quarterly earnings instead of 25-year demographic flows, optimizing for the short term in a moment that rewards long-term positioning more than any other in living memory. The people who become the next generation of everyday millionaires won't say they got lucky. They'll say they paid attention. They understood what was happening when it was happening, not in the history books years later. The transfer has started. The capital is moving. The math is available to anyone who chooses to engage with it. The only question is the same one Jake asked himself at 11 p.m. on that Tuesday night in 2018, sitting in his kitchen reading a report he stumbled into by accident. Am I in the path of this or not? Follow for the answer week by week. The transfer has started, and the people who will look back on this as the moment everything changed are making that decision right now.